5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you. Welcome to 2019. Happy New Year to you. I hope you had a wonderful, wonderful, restful time over this holiday break. So nice. I know many of you who are in college, or many of you who have jobs where you get that break. It's so nice just to have a little bit of a break, or a siesta, so to speak, in the middle of what has really been quite a cold winter. Really is great to have you here on Follow the Money Radio. And I'm excited to tell you that I'm going to be joined today by my lovely wife. You know her well. For those of you who are members of our website, you've talked to her many times through our questions, whenever you send in questions, or through the customer tickets. And her name is Jennifer. For those of you who have not heard her before on the podcast, Jennifer, it's wonderful to have you with me today on the podcast.
I am very happy to be here. I'm so excited. I've been on the podcast many times in the past. I had to take a little bit of a break over the last few months, but I'm back, and it's really nice because I love just being able to reach out and share thoughts, share things about all kinds of things, money, trading, share questions. You know, it's great to hear questions that other people and other members are asking through our support area of our membership, and share those on the podcast and have Jerry answer them here for you. Because if one person has the question, then many other people probably have the question also. So I love being able to do that on the podcast. And I also wish you a very happy new year. I hope you're feeling healthy, happy, and ready just for a great year. If you are looking for any ideas for resolutions, maybe many of you have already made some, but if you're looking for some good ideas, I invite you to visit followthemoney.com/5levels. That's where you can read through how Jerry and I, like literally a step-by-step of how Jerry and I broke free financially over the past decade. Actually, more than a decade, but we codified and really put it in a step-by-step for you over the past decade of exactly how we did it. And that's called our 5 levels of financial freedom. You will find some great ideas if you're looking for some financial New Year's resolutions for the new year.
I love that. I think the 5 levels is a great place for people to go. Followthemoney.com/5 levels. And like Jennifer said, you know, knowing about the economy and knowing about the fragile state of our debt-based system and the fractional reserve banking and the fact that the dollar is backed up by nothing, and the fact that, you know, we have a national debt that is completely, unsustainable, and the fact that we're running trillion-dollar deficits now. I mean, all that stuff you can know. You can know all that stuff. You can learn that, you know, just simply by reading books and educating yourself. But, you know, what do you do with that knowledge? I mean, what do you do whenever you know that stuff, but you're still in a place where your finances aren't really reflecting the fact that you're going to be okay, if the system suddenly breaks down? And Jennifer and I realized that even though we had good jobs, you know, about a decade ago, even though we had good things going on, and even though it seemed like everything was okay, we knew that we had to dig deeper. You know, we knew that we had to create multiple streams of income. We knew that we had to get a core portfolio, or we had to carve out a core part of our portfolio for precious metals. And We had to, build up 6 months of liquid savings so we could be protected and insulated from the uncertainties of life. And so the 5 levels of financial freedom is something that we offer absolutely free on our website. I'm so glad you brought that up. I really am, because that really is a game changer. It's been a game changer for so many people over the years. We still get emails all the time, as you well know, Jennifer, from people who say, I just read 3 to 5 levels of financial freedom. I'm on level 2 and I have a question. And we encourage that. So go through the 5 levels of financial freedom. If you have a question, we're here. We're here for you. We want to help you succeed in this crazy, crazy world. So anyway, Happy New Year to you. 2019 is here. And the name of today's podcast is Trading Q&A. And we're going to get into probably, I don't know how many questions we got today, Jennifer, maybe 5, 6 or 7, about 8. About 8 questions. So, we're going to get into those questions here in just a few minutes. Beforehand, I just want to give you a couple of announcements. Number one, I have been working, in fact, over the New Year holiday and even the Christmas holiday, I was working on the upcoming report that's going to be coming out for all of our Platinum members, and it's also going to be for sale on the website. It's our 2019 Cannabis Stock Report. So the cannabis space is so unbelievably exciting as we see cannabis legalization growing across the country. And, some people have moral objections to investing in cannabis. They would say, hey, I don't know if I want to invest in people getting high. I mean, I totally understand that. But really, the huge aspect of cannabis is not necessarily just that. There's other ways for people who have moral objections with cannabis to actually invest and not participate in that side. There's the CBD side, the CBD oil. I don't know if you've been seeing that craze, but it's been going on around the country, and CBD is a really promising aspect that comes out of the stalk or the stem of the cannabis plant. So it doesn't have any of the THC, which is what makes it psychoactive. It doesn't make you high, but it provides you with relief for pain. It provides you with other kinds of health benefits. And these health benefits of cannabis have been so long suppressed because of the federal regulations. Any kind of university or scientific research firm that wants to get into the cannabis plant and really research it and try to figure out its medicinal properties, they run the risk of losing their state funding or their federal funding. And so once the laws change, we're going to see a sea change in this. And many institutional investors, the big money, like the big hedge funds, the big, the big funds that are out there, even pension funds and all of this, they're not going to get into this space because of the federal regulations right now. So this is one of those rare times where you as a retail investor, you as a retail trader, with a smaller trading account and without the worry of all of these federal regulations imposed upon your own investing or trading, you actually have a head start here. The little guy gets a chance to have a leg up for a change. And before the big institutional inflows finally come in and these big investors start investing, once the laws change, and it's coming. I mean, it's just a matter of time. You can see the writing on the wall. Cannabis is going to be legal across the country. It's just a matter of time. And so when that happens, you're going to see a lot of big money inflows coming in from institutions. And if you're positioned properly ahead of that time, in the right kinds of companies, you're going to be, I think you're going to do really well. And so in this report, the 2019 Cannabis Report that's coming out later this month, we're going to provide that, to all of our Platinum members. It'll be for sale on our website. So be watching for it. And we'll send out an email when it's ready. But it's going to be a really great report that'll introduce you to the whole world of cannabis stocks and the whole idea. We're going to share with you some of our favorite stocks. I'm really excited. I've already been buying a few at the beginning of the new year because so many of them have been beaten down. And I provide those real-time alerts. When I make a trade, I post it on our private Twitter page over on Twitter. It's twitter.com/profit tracker with 2 Ks. And that page is for all of our Platinum members. So they can see every time I make a trade or I buy a new stock or sell something. I mean, they can see it right there. It's transparent. So anyway, all exciting stuff. And that's coming. Plus, we also have a cryptocurrency report coming out later this month as well. And we are going to be adding some new cryptocurrencies to our own portfolio. And I think we have a question about crypto. So I'll save my comments on crypto for the question. When that comes in. I think I saw that. So we'll hold that off for later.
Yeah, and anybody who is interested in what Jerry just mentioned about maybe the cannabis stock report or even those real-time trading alerts via our private Twitter feed, or the new cryptocurrency report coming out later this month. You can get these things in our Platinum membership right now, 25% off. We just released an amazing coupon code. We wanted to make this 2019 year for people who are wanting to really dive deeper into stock trading and investing and really increase their knowledge on these things. We want to make it very affordable at the beginning of this year, and so we have a coupon code for 25% off. And that's not just for your first month, it's as long as you keep the plan. And so I want to stress, this is a great deal. This is extremely rare. And so you can use the coupon code SAVE25, SAVE25, when you check out. And that coupon code is good for any of our plans, but it's really a great deal when you go for the Platinum plan. You get a lot of money off of that plan.
Yeah, good point. Save25 is the coupon code. And yeah, I would be using that one. If you've been thinking about joining Follow the Money at all, I'd be using that one because I don't know how long we're going to keep that up. That's a really great deal. 25% off any of our membership plans. And not just for your first payment, but for every single member payment after that, you'll get that 25% off. So that's a fantastic deal. Save 25. Okay, so let's go ahead and dive into some questions because, we get lots of questions here. And Jennifer, I know you have several for me, so let's go ahead and dive in.
I do. Question number 1, Jerry, comes from Gary in Houston, Texas. And his question is, what are some of the biggest mistakes that you have seen traders make? Okay,
so, certainly over the years, just for those of you who are new to our podcast or new to Follow the Money, I've been trading. I started trading back in 1996. I traded my first stock in 1996. And I traded my first option several years after that. And then, so, I've made a lot of these mistakes that I'm going to talk about here. But, as a coach, as a trading coach here at Follow the Money, one of the things that I often see people do is, and oftentimes this is the case when they come to Follow the Money, that maybe they've been trading or investing or they've been trying to read, they've been reading books, or they're trying to find a way to figure out how to do this. And I find that oftentimes one of the biggest mistakes that traders make is they don't have a system. They don't have rules. So you don't necessarily have to have a system per se. Like we actually have a trading system. We built our own algorithm and all of this. I mean, you don't necessarily have to do that. But you do need rules, right? You need rules. You need when I say system, you need a systematized set of rules that you say, okay, this is what I'm going to do. And so, some of the rules that we talk about are things like, don't trade in the first 30 minutes of the market open. That's oftentimes what we call amateur hour. It's only 30 minutes, but it's amateur hour because that's when all of the previous day's trades are kind of being settled, and then people who had placed an order that didn't get placed before the day closed, they're getting settled then. Then you have a lot of people just stumbling into the market, just buying at the market. So you often get some really erratic price movements and a lot of volatility there. So that's an area we don't like to use. We don't like to trade during that time. Another thing like, using stop losses. I mean, I cannot tell you how many people I've talked to over the years who have come to Follow the Money and they're like, oh, wow, I didn't know there were stop losses, that you could actually place a stop loss order, which is, by the way, for those of you who don't know what that is, a stop loss order is simply an order that you can place after you buy a stock or even simultaneously when you buy the stock. That basically says if this stock falls like $1 or 50 cents, whatever you decide, just automatically sell it. So you don't have to be there. You don't have to be there and watch the stock and sit in front of the computer screen. But the stop loss order will automatically execute if the stock falls below a certain price. Or maybe you say, I think the stock is going to go up, and I want to lock in the gain. I don't have to be here. Well, you can place a stop loss on the upside. Say maybe you buy the stock at 13 and say, hey, I want to sell it when it gets to 14. We'll place a stop loss order or a stop order, and it'll actually execute at that price. And so, I think just kind of in general, we've seen a lot of over the years, I've seen a lot of just not using rules, not using stop losses. Also, many people are over trading. Right? They think that they have to trade every single day, or they feel like they have to constantly be buying or selling. And it's really the ones who sit on their hands and are patient and wait for the right setups to appear on the charts they're the ones who make the most money. And so over trading is definitely a major kind of cardinal sin, if you will, I've seen in trading. And then finally, I'll just mention one more. I know we have for the sake of time, but one more that I've seen is being too influenced by opinions. Market opinions are a dime a dozen. If you turn on the financial news TV, or if you look in the financial media, you're going to find today or tomorrow or the next day, somebody's got an opinion about where the market's going to go tomorrow, right? And so many times, if you're influenced by that, it can really hurt you, because you're relying upon opinions, and then you're not really paying attention to the underlying trend of the market. And so we teach here at Follow the Money that we want you to follow trends, not opinions. And so I may have an opinion about the market. I may think it's going to do something, but that doesn't matter. I mean, I may think the weather's going to do something tomorrow, but it doesn't mean that it will. Meteorologists can't even get the weather right half the time a week from now. So how in the world will we know where the stock market's going to be a week from now? So I think let me just sum this up. First of all, no system or rules, certainly a big mistake. No stop loss orders. I see that often. Over trading, certainly something that's problematic. And then being too influenced by opinions. I think those are some really key, areas where I see traders make mistakes.
Yeah, and I can't tell you how many people I've talked to about this whole not following opinions, but rather trends, and how that just, it cracked their skull open, and it totally changed their world as far as their trading and their outlook on investments and other things. So that's a really good one, Jerry. So we'll go to the next question, and it comes from Terry in Vancouver. And Terry's question is, what is your opinion of penny stocks? Do you ever recommend them or provide penny stock trading ideas?
My first knee-jerk reaction when I hear that is I always typically say as a joke, I say I like to short penny stocks. And, shorting means that you want to make money when they go down. And certainly that's one way to make good money with penny stocks. I think if you're going to approach penny stocks in general, learning how to short them can be really good, because penny stocks are different from regular stocks. First of all, for those of you who don't know what they are, they're typically defined by the SEC as a stock that's between a penny and maybe $5 on the upside. You got to remember that cheap stocks are cheap for a reason. That's always important to remember. You're not the first person to see the stock. It's not like you're finding the stock and nobody knows about it. It's public knowledge, and so everyone knows, or everyone could know, that stock exists, and they know that it's currently priced at that price. And so, the fact that you see a stock that's trading very cheaply, doesn't mean that it's going to go up. In fact, cheap stocks tend to get cheaper. And I would almost say that's almost a rule that I've discovered, is that cheap stocks tend to get cheaper.
I also think of that retail phrase you hear, you get what you pay for.
Yeah, it's so true. You really do. You get what you pay for. And so, historically, I'll just say this, historically, the sweet spot for me, whenever I'm looking at a stock, this is some people say, oh, I'm looking for a penny stock, or I'm looking for a stock that's less than $1. Like, that's what I want. For me, like that emotion that people feel with penny stocks, I get that emotion when I see a stock trading, a high quality stock trading in between $28 and $32. The $28 to $32 is the sweet spot for me. I really is, because historically speaking, in the back tests we've done, and also just from the back test and the historical studies I've read, and what I understand about the market, is that you get a high quality stock in that $28 to $32 range. That's often where it takes off. That's often where it begins to really start getting investor attention. It starts to get hedge fund attention. It starts to get institutional attention. That's a really key price range. So for me, that's what gets me excited, is seeing a high quality stock in the $28 to $32 range. But when it comes to penny stocks, sure. I mean, sometimes you'll find stocks that get beaten down below $5, and you could have an opportunity there. I don't want to say that penny stocks in general are not worth trading. There's a niche for that, and if you want to focus on penny stocks as your niche, then great. I mean, I think you can do that. I just want you to know that it's going to be very difficult, and you're going to be in a whole different world where you have pumps and dumps. And basically what that means is, because these stocks are so cheap, it doesn't take very much money to drive them up. And so newsletters love to do this. Newsletters in particular are kind of the primary offenders. They'll put out a note about a penny stock, and they'll hope their members will buy it. And then, of course, they buy it ahead of time. They've kind of front run. And then whenever the penny stock goes up in value, they dump, right? So they pump it in their newsletter, and then they dump it after everybody buys it, and they leave you holding the bag. So in general, it's hard for me to get excited about a penny stock unless it looks overvalued and I want to short it, right? That makes me excited in the penny stock space. So very rarely do I see a penny stock that I just get excited about unless I'm wanting to short it. But that doesn't mean that there's not appropriate times for penny stocks, and that doesn't mean that sometimes we don't put them in our Robinson report. Sometimes I see a penny stock that looks great. It's rare, but it happens. And so we do provide penny stock trading ideas, even in our daily trading idea occasionally.
Okay. Next question comes from, let's see here, we've got Gail in Cleveland, Ohio. Gail says, what are some of your favorite sectors and industries for investing in 2019? That's a great question.
That is a great question. It really hasn't changed from 2018. And I'll tell you, I got about 5 different areas that I like as we move into 2019 here. First of all, as I mentioned at the top of the program, cannabis stocks. I think that cannabis stocks have a tremendously long runway. There's going to be a tremendous amount of money made as we move from this illegal status to legal status at the federal level. And so I think there's a lot of money to be made there, and I am personally, getting myself positioned ahead of that major run that I expect to see. So cannabis certainly is way up there on my list for favorite sectors and industries, or actually industry groups. Another area which is not technically a stock industry, it's slowly becoming one, is cryptocurrency. There's quite a few stocks that have exposure to the cryptocurrency space. Right now, cryptocurrencies prices are very depressed, and it's kind of tough to get excited about them right now. But it's an area that I still watch. It's an area that I'm still invested in, and I've been invested in it since 2013. So it's a long, kind of a long haul for me in the crypto space. Another area that I particularly like in 2019 would be China. China, especially Chinese tech stocks. Many of these high-quality Chinese tech stocks have really been beaten down in the latest tech rout in the global stock market. And so many of these companies are making gobs and gobs and gobs of cash. The revenue growth is outrageous. Their earnings growth is off the charts, and their prices are depressed right now. Because generally speaking, people are afraid of the risk. And so I like Chinese tech stocks. In fact, at our upcoming 2019 summit, we're going to be talking quite a bit about China as kind of the dominant player of the 21st century. We see the 21st century as the Chinese century. We've talked about that extensively over the years, that we believe China is on the rise. It's unstoppable. No matter what the U.S. tries to do, it's just simply a matter of, its time has come, right? It's hard to stop. So China is certainly up there. Let me give you 2 more spaces that I like in 2019. First of all, REITs, real estate investment trusts. I like these for the income they provide. I'm just a big fan of real estate, as many of you know. I love affordable housing. If you want to go out and buy a 3-bedroom, 2-bathroom house, or a duplex, or a 4-plex, or a triplex, or whatever. I mean, I just love good residential housing that's affordable. I'm not talking about these, condos on the beach in Florida. I'm talking about, good 3-bedroom, solid 3-bedroom, 2-bathroom houses in good working man neighborhood, in an area that's not wildly overpriced. Right? They're all over the country. And many of these REITs, real estate investment trusts, what they do is they invest into these kinds of high quality real estate out there. And they give you the ability to kind of cash flow without having to deal with the overflowing toilets and dealing with the renters and dealing with all of the, all the hiccups that come along with actually being a landlord. You can actually get cash flow from the REITs, and they're really quite a cool niche that you can focus on as an investor and even as a trader. And they pay really high distributions or dividends. And so they're certainly worth looking at. I've been a long time. I've been fascinated by REITs, and I'll continue to be as we move into 2019. And then finally, another area that's finally beginning to thaw are precious metals and what I call PACE. If you've read our book, Bankruptcy of Our Nation, If you don't have a copy of that, go to followthemoney.com/bankruptcy. It's the book that I wrote back in originally back at the economic crisis of 2008 and revised it several years later. And in that book, we talk about the need for understanding PACE, precious metals. P, it's an acronym. A stands for agriculture. C stands for commodities. E stands for energy. These are hard assets. And in a time like ours where we have everything built upon a world of debt, understanding hard assets and actually having exposure to them at the right times can be invaluable to your portfolio. So I like precious metals. I like agriculture. I like commodities. I like rare earth metals, for example. Certainly very depressed right now. I think we're going to see a lot of gains in those. Maybe not this year, but we'll see. Lithium is another particular commodity that I really, really like for the electric car revolution and the renewable energy space. I like solar. There's so many different areas in this PACE world that I really like. And actually, our members can go to followthemoney.com/PACE, and there we provide you every weekend. We look at all of our favorite, there's about 40 some odd, or 20 or 30 or some odd ETFs that we look at in this space of precious metals, agriculture, commodities, and energy, and we give you uptrend alerts and downtrend alerts. So when we see one that's forming a new uptrend, we think it's going to go up, we alert you every weekend. So, those are some of the areas: cannabis, crypto, China, REITs, and the PACE space.
Yes, and regarding PACE, we just called, I think, 3 or 4 recent uptrends for members. So you can go over to followthemoney.com/PACE. If you're a member and did not see those or catch those in the recent issues of the Robinson Report, and you can see what those recent new uptrends were. Moving on, Jerry, to the next question. It comes from Joseph in San Jose, California. He says, I am thinking about getting started in trading stocks, but I can't help but feel that it is like gambling, which I consider to be immoral. Can you help?
Well, first of all, shout out to San Jose. We were just out there a while back and just really had a great time. What a lovely little town and awesome people out there. I totally get it. Is his name Joe? You said, yeah, Joe. Okay. Joe, I totally get it. I understand the moral aspects of trading. You think, well, it kind of seems like gambling, but you got to understand that at least from my perspective, and I'm not a gambler. I mean, I was when I was younger. I certainly, probably dabbled in gambling, and I found it to be pretty reckless, and I lost money, and I'm not saying that people can't be professional gamblers and all that. I'm not speaking against the whole thing. I'm just saying that for me, I'm not really a gambler, but I'm a trader, and I don't see the two as the same at all and whatsoever. In fact, trading has been going on for millennia. People have been buying something for $1 and selling it for $1.25. That's one of the oldest concepts of mankind. They've been doing it for thousands of years. So if trading stocks is immoral, then so is trading many other goods. Whenever I was young, I used to go to a lot of garage sales, and I think some of you know my story that I paid my way through college. Well, I paid a lot of my way through college, but also kind of funded my life by having an Amazon business, early on. And I would buy things at a garage sale for $1, and I would sell them on Amazon for $2, or sell them on Amazon for $10. And is that immoral? I mean, did I really add any value? I bought something cheap and I sold it for more. Is that immoral? I mean, if it is, then almost every job that you're ever going to have, is going to be immoral. So I don't think that trading stocks is immoral. If you buy a wholesale good and you resell it for more, then you're a trader. I mean, you're trading. You don't add any value. You just bought low and you sold higher. So gambling is a lot about odds. It's a lot about chance, right? But trading is not. Trading is not about odds. It's not about chance. It's about understanding human emotion. It's about understanding historical trends. It's about understanding how to read a stock chart. It's about understanding technical and fundamental data. It's understanding about earnings per share. It's about understanding, earnings growth and all of these other things. And human emotions drive the stock market. The stock market is like this huge picture of humanity and human emotions. And so when people get scared, the prices go down. People get, jubilant, and they start feeling the good times are here to stay, you start seeing prices, go up. And understanding that human emotion has nothing to do with odds. It has nothing to do with chance. It just has to do with understanding and interpreting data. So I would tell you that, even if my answer doesn't help you there, maybe you should stay away from trading. If it really bothers you, I don't want to talk you out of your own emotions. But I would say personally, I don't see it that way. I've never felt like I'm gambling. Now, I know you can move into a place where you're day trading, and I think there's some areas there where maybe you could build a case that maybe that might be gambling if you're just intraday trading. But even then, I still think it's wildly different as long as you're using a system with rules, and it's just not quite the same at all. So I hope that helps you, Joe. I really do.
Yeah, and speaking of all those rules and the system, I mean, that's the part of it that makes it a lot less like gambling and not much like gambling at all. And if you're wanting to get into, if you're just starting out, like Joseph said he was, a great place to start is our Stock Trading University podcast. You can just go to followthemoney.com and click under podcasts, and we take you through 80 different episodes that are about 1 minute each. And so you can basically learn the basics of stock trading in these series of 1 minute podcasts. It's a great place to start. And we've had many, many members who have sort of graduated, if you will, from that Stock Trading University podcast and gone on to make many, many great profits in their stock trading. Okay, next question comes from David in Baton Rouge, Louisiana. Hi, David. He asks, does Follow the Money have any recommendations for online brokers? Who are the best ones in regards to fees and services?
I think that's a great question. It's really subjective. It really all depends also, and I say that because it depends on what your goal is. And also what your personality is like. If you don't need a lot of bells and whistles, if you're more of a person who says, I'm just all about paying the cheapest possible transaction fee for each trade, well, then I would say probably Interactive Brokers. Interactivebrokers.com, I guess, is the domain. And you could go there, but they have a lot of great resources for traders. In fact, it's very robust. But if you're really price conscious, I would say that's probably one of the cheapest out there. I personally like using like E-Trade. I like using TD Ameritrade. I really like their options platform. I also, I even have an account right now with Fidelity. I think they have some really great, resources as well. So, I would say, some of those as well. Also, I should probably stress this too. If you're really concerned about price, there's another one called Robinhood. Probably most of you who are trading have heard of it before, but Robinhood.com is one that actually allows you to trade for free. I mean, there's no commissions at all. I mean, in that case, you have a lot less it's very limited on what you actually have access to, so you don't get the full robust tools and things that you would normally get with a full service broker or something like that online. But Robinhood provides commission-free trades, and also I would also, as I mentioned, E-Trade, TD Ameritrade, Interactive Brokers is good for cheaper trades, and also Robinhood. And I might just throw in one more, and that's Zacks Trade. Well, I did a review on that not too long ago, Zacks Trade, and that's just Zacks Trade. And, it seemed like a pretty legit outfit. I haven't used them, but they seem really competitive, so I would just mention those.
Yeah, in Zacks Trade, they offer, I think, access to 19 or so different global exchanges, and so you can get access if you're wanting to trade stocks on foreign, outside of the U.S. exchanges. They might be one to check out. Okay, next question, Jerry, comes from Hannah in Jacksonville, Florida. And that is, I've often heard you talk about the IBD 50. Can you tell me exactly what this is?
Yeah, the IBD 50. Yeah, it totally makes sense that you would ask that. The IBD 50 I do talk about occasionally, especially on our member calls and oftentimes even in our the Robinson report we put out every weekend. The IBD 50 simply stands for the IBD stands for Investors Business Daily. That was started by a fellow by the name of William J. O'Neill, one of the greatest stock traders of our generation. And he actually started his own newspaper, Investors Business Daily. And it's just been one of those newspapers that I've taken for a long time. And they have in the newspaper, they have a list of the top 50 growth stocks according to their own proprietary methods that they compile all the data, and then they list this list of 50 different stocks that are high growth stocks. And what's nice about that list is it's kind of a self-fulfilling kind of prophecy, so to speak. So you have this list that many people, many traders will take the IBD 50, or they'll take the IBD newspaper, and then they will use the IBD 50 list for their trading. And so it kind of creates its own demand. It kind of creates its own demand because when a stock gets listed in there, it's a little bit prestigious, and so people will be attracted to it. So that's what it is. You can actually access that. I mean, I'll give you a little secret here. I mean, it's kind of a little secret. Investors Business Daily won't want me saying this, but certainly if you want to find out what's currently on that list without actually paying for the newspaper, there's a secret kind of back door that you can use. If you Google the ETF that is based upon IBD 50, it's called the Innovator IBD 50 ETF. And because the ETFs are exchange traded funds, and what that fund is it's based upon the current list of the IBD 50. So when a new stock enters that list of 50 stocks, then that fund buys that stock and they sell the one that got kicked out because they only keep 50 stocks at all times. And ETFs, by law, have to provide their holdings. They have to make them public at all times. And so every day you can log in there and see what the current IBD 50 list is without actually having the IBD paper. Now, I mean, that might be cumbersome for you, but if you just wanted to see currently like what kinds of stocks would be in that list, you could go there. I wouldn't recommend that for daily use. It would be way too cumbersome.
And one of the things, Hannah, that our members do with the IBD 50 is they will sort of keep a watch list of those stocks and type them into our Profit Tracker trend trading software and use our software to see when to perhaps enter those stocks. So, of course, you get the entry signal and then the downtrend signal using our software. And so that's what a lot of our members will do with that list is they will use it in conjunction with the Profit Tracker software.
Jennifer, I've heard the same thing about like a lot of these other newsletters like Stansberry and also Agora. A lot of people will take those newsletters from these different stock outfits but they also get follow the money because they want to be able to type in those stocks when Stansberry or Agora recommends one of those stocks. They want to type it into our software and say, oh, is it forming a new uptrend? And so our software really helps you identify when a stock is forming a new uptrend or forming a new downtrend, right? So maybe you want to be selling the stock. When do you sell the stock? Well, our system is really designed to help you identify those trend changes. And so, yeah, that's a great point that you add because we hear that a lot from our members.
Thanks, Hannah, for that great question. Next up is Fred. Hi, Fred, in Minneapolis, Minnesota. He asks, as a U.S. stock investor, how can I get access to Canadian stocks?
Yeah, that's a really common question. We get that all the time. I know, Jennifer, you answer that all the time. We get that question because a lot of the mining, like a lot of the gold mining stocks and silver mining stocks and even the cannabis stocks that we were talking about, a lot of them are listed on the Canadian Stock Exchange. And, as a U.S. investor, if you're listening to this in the United States, you say, well, how do I access the Canadian Stock Exchange, from the United States? And it's very simple. Jennifer had mentioned that Zacks Trade provides access to many different global markets, but many other brokerage firms do. Well, not many. There's at least 3 more that I know of for sure that allow you to access Canadian stocks without having a whole lot of a big deal. I mean, you can just create an account with one of these online brokerages, and you can place a trade for a Canadian stock on a Canadian exchange just as simply as you would like buying Microsoft here in the United States or buying Apple stock right here in the United States. And those 3 brokerage firms here are Fidelity, Fidelity.com, and then Charles Schwab. I guess Schwab.com. And then also I mentioned Interactive Brokers. So those are three outfits online that you can open an account with. Very simple to open up a brokerage account with these places. And then you can get access to those Canadian stocks as a U.S. investor.
All right, we have about a couple minutes left in this segment, so time for one more question, and that comes from William in Edmond, Oklahoma. And his question is, Jerry, with cryptocurrency prices currently all trading so cheaply, do you think that we have seen the peak? Or do you think there is still more upside ahead?
Well, it's a great question. I think that we have not seen the peak. I think that what we saw in December and January of at the very end of 2017 into the beginning of 2018 was amazing. It was an amazing run. Many of you remember that. We made, I don't know how many people wrote in and said, oh my goodness, that run, made us a lot of money on many of the cryptos that we put out in December of 2017. I mean, it was just quite incredible. The amount of money that could have been made during that time. And so since that time, that we've seen cryptocurrencies just really depressed. I mean, they've just crashed. It's been tough, and it's been a miserable, miserable month for many people who were overweighted in cryptocurrencies. And that's one of the things that I would say to you is, A, I don't think we've seen the top. But B, I think at the same time, it's important for you to always, always, always keep cryptocurrencies in their proper place. And for us, we've told members this forever. I mean, this is since 2013, we keep 5% of our total investable assets. Like if you took all of the money that we could right now go out and invest, right? If you took all that money that we could go out and invest, we take 5% of that and we put it towards cryptos. Not 6, not 7%, not 3%. 5. Like we select 5% to keep in cryptocurrencies. That's what we want. That's the exposure we want. Now we may raise that over time as the acceptance of cryptocurrencies rises. But for now, we keep just 5% of our total investable assets exposed to cryptocurrencies. We own these cryptocurrencies. We own Bitcoin. We own Ethereum. We own Ripple. We've owned them for a long time, and then we also own many others that we include in our portfolio. That gold members and platinum members have access to all the time. And we're getting ready to do a big update, as I mentioned, this month for our cryptocurrency portfolio. So you can see some of the newer ones that we're adding. But directly to your point or to your question, do I think there's more upside ahead still? Yes, absolutely. And I think you'll notice that if you look at any chart of a cryptocurrency, you'll notice that it looks like looks like a bunch of waves where you'll have a wave of buying and then you'll have, like this boom and then a bust. And then you'll have another boom and then you'll have another, ensuing bust. And that's the last thing that we saw at the beginning of 2018 was the bust from the boom that came in late 2017. So I think that we're going to see more of that. That's been the pattern that we've seen in cryptocurrencies. And so when they're low like this, when they're really, really, really cheap like they are now, it's nice to see some of these cryptocurrencies nice and cheap because it's really shaken out a lot of the weak hands. Back at the beginning of 2018 on Twitter, I couldn't turn on Twitter without seeing some, crypto expert, giving recommendations on which crypto to buy. And now they're all gone. I mean, I don't see, nobody. It's like they fled like cockroaches. I mean, they don't want to. They're completely gone, and that's healthy, I think, because it was just too frothy. And so a lot of the weak hands, have been kind of shaken out. The people who are holding on to cryptocurrencies are going to hold. Guys like Trace Mayer, who we had at our last 2018 summit, he spoke on cryptocurrencies there. He's holding. He hasn't sold any of his Bitcoin. That I know of. I recently talked to him. He said he's not. I mean, so I'm not either. I'm just holding on. And I think this is a long-term play that cryptocurrencies, not all of them are going to survive, but you're going to have some that do, and they're going to stand as juxtaposed, to use a big word, to the current financial system. They're going to represent something that's outside the system, a lot like gold, a lot like silver, that can't be manipulated, like our paper assets. And so I think it's here to stay. I think the technology is innovative. I think it's going to be here to stay. I think you're going to see a lot of evolution and changes over time. But no, I think we're going to see another boom. When that boom is going to come, I don't know. Will it be 2019? Maybe 2020. But I think we're going to start seeing another big uptrend happen. And when that happens, the questions are going to change. They're going to be like, which one do I buy, or which, But right now, the question is there any more upside? And that's a good sign. That question is a good sign. That means that we probably certainly do, because historically these cryptocurrencies move in a boom bust cycle. Jennifer, thank you for helping me with all of these questions. Was that the last one? That was the last one. Fantastic. Well, I want to thank everybody for tuning in. We have just a little bit more on the other side of this break. Hold tight. We'll be right back. Friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years' experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. Friends, welcome back to the program. You're listening to Follow the Money Radio. You can find us online at followthemoney.com. And wow, what a great program we've had today. I really do appreciate you tuning in. It's really an honor to be a part of your life right here on this broadcast. In our final moments, just a quick announcement and our final word. I always like to leave you with a final word before we close out our podcast. First of all, just a quick announcement. This Friday, the 4th of January, we're going to be doing something very special for all of our Platinum members. We have a live webinar that I'm going to be teaching called Trend Trading Secrets. You're going to learn some of the most powerful lessons that I have gleaned from 20-plus years of trading in this live session this Friday morning. You can come and bring your questions. It's going to be a fantastic time. All of our Platinum members, we've been talking about this. We're excited about it. I'm going to cover so much, and we're probably going to take 90 minutes of just covering some major concepts that if you can soak this stuff in, your trading, I believe, can just go to the next level. These are going to be key concepts that'll help you understand what you need to know to be a successful trader, specifically a successful trend trader. And I want to stress the fact that I'm a part-time trend trader. I used to be a full-time trader. I spent a lot, several years kind of really just focusing only on trading. But, life is more than trading. Life is more than just investing. Life is, more than and so, for me, I have a lot of other things going on. I got a family, of course. I'm married. I have other businesses going on. I have, I live on a property where I have, chickens and a huge garden and, pond. I have a lot of things to take care of around the property. And so I can't just spend my time staring at a screen all day long. But learning to trade and learning especially how to trade in your spare time, it's such an amazing skill that you can learn. And I'm going to be spilling the beans on everything, that I've learned over the years, as much as I can share within 90 minutes on Friday. So if you're not a Platinum member and you want access to this, you gotta become a member. And don't forget that we have that very special coupon code SAVE25. You can take off 25% off any of our memberships. That doesn't matter if you're a monthly member or an annual member. You just choose. If you pay for the annual, you save even more. But really powerful coupon code, SAVE25. I want to encourage you to be there this Friday for anybody who is one of our Platinum members. You're really going to enjoy this. And it'll be archived, so those of you who are Platinum members, you can always tune back in. If you miss it, can't be there live, you'll be able to watch the replay. But if you're there live, you can ask your questions, and I look forward to seeing you there. All right, friends. Well, in these final remaining moments, I want to leave you with this final word. This time, a scripture taken from the book of Proverbs, one of my favorite books in the Bible, including Ecclesiastes, too. Oh, I love those two books. But Proverbs chapter 13, verse 11, the King James Version says, "Wealth gotten by vanity shall be diminished, but he who gathereth by labor shall increase." Isn't that powerful? Listen to this same scripture from the New Living Translation. It says, "Wealth from get-rich-quick schemes quickly disappears. Wealth from hard work grows over time." Isn't that powerful? Isn't that powerful? You know, I've learned this over the years that get-rich-quick schemes and trying to get rich quick is just the wrong way to go. It's just the wrong way to go. Many people don't like hearing that. They don't like hearing that you need patience. They don't like hearing that you need discipline. They don't like hearing that you need wisdom that's informed by the correct apprehended knowledge. But it's the key to your financial future. Wisdom, discipline, patience. Oh, it's so important. Like I said, many people don't like hearing that. They want a get-rich-quick strategy. But that typically leads to poverty. It leads to heartbreak. It leads to destroyed relationships. It leads oftentimes even to poor health. Learn to be patient. Learn to be diligent. Sow the right seeds and keep executing, and your harvest will come. And that's just something to think about. Remember, friends, when you want the truth, just follow the money. Have a safe and happy rest of your week, and happy 2019 to you all around the world. God bless, my friends, and we'll see you right here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.